What is going on, everybody, and welcome to another technical analysis. And what I'd like to do in these videos is provide you guys some entries and exits for stocks that I'm looking at throughout the week. Sounds like something you're interested in. Consider subscribing, as I do also provide a weekly analysis where I go over current events, earnings, scheduled events to get you prepared for the week ahead. You can also check me out on X at Hemi137 as I give you also a daily pulse on the market there as well. And you can go ahead and smash the like button while you're at it so we can go ahead and kick off this video. Now, something I've talked about over the past week is we're coming into a very critical level here. This essentially 5731 is very critical. We've broken past it, and if you've followed me at all, you know that I always talk about if you break major supports, you're going to retest it and typically get a heavy sell-off. Now, with the series of events that have been occurring, it looks like we might get some quantitative easing, given some hints dropped by Powell in the beginning of April, when I've been focusing heavily on what kind of events would make that occur. Again, we've had fear to this point because of tariffs and uncertainty. The problem being is that what it's looking like we're actually more in a deflationary state with all the essentially selling or essentially the cutting of employment and all the essentially deportation is going to cause this massive deflationary state. And we're seeing that reflected in trueflation. And so if that is the case, we should, in the next core inflation report, see a massive reduction in inflation. But the problem again being is that your unemployment is at a point where I believe it's well over 5%. But again, with all the ghost jobs and everything else, again, the market is controlled by headline news, not the revisions that have occurred that essentially have told you that you've been well over to almost about 2 million ghost jobs that never existed. And so you're living off a market where people are getting let go or not even leaving their positions because they know there's not other work out there, and essentially holding on to these positions a lot longer than they potentially would in a normal given healthy environment. So again, I think all that is about ready on the cusp of being presented to the market. And so this is why this level is so critical, because you have got to break at this critical level. Now you're retesting it. I am anticipating a strong leg down, which will potentially be the last leg. Now you have to also take into account this is why I do events and analysis on this, because I think it correlates with your technicals very, very well. And there will always be a triggering event. So you have to have continued fear for the market to continue to sell off. The tariffs are the only thing, in my opinion. Yes, there's a debt bond going on, but there's a lot of loopholes and everything else that you can essentially go. There's a lot of controls in place that help this market from just straight crashing all the time. And again, the market's not going to crash off of tariffs. Again, there's a big issues with essentially what's going on with the housing sectors too. Something I didn't mention in my weekly update, but in that Fannie Mae, their CFO and CTO essentially got fired in the same day, which is the same exact thing that happened in 2008. You have to reflect back on that too, is that what happened in 2008 when they essentially got fired, it was back in 2010. And essentially the market continued to press up from that point. And you reflect back on 2022, the most anticipated recession. Again, you have to understand that the market sold off heavily during that period. But the housing market essentially took a couple years after that for that to roll out. And so we may be living in the 22 or the 2010 scenario as opposed to 2008. Maybe we only saw the 27% correction. That's all we're going to get. And understand that back then in 2020 and 2010, people thought the market was going to continue to crater after that point, and then never ended up doing that and started recovering. And you have to understand the kind of environment you're in. Everything got cratered in 22, and then ultimately understand tech was the only thing that really rebounded since that point. Now, yes, you have to understand AI and robotics are going to be leading this new gig economy, and it's going to vastly change, just like everything did with industrial revolution, right? We haven't seen a big sweep in like that in a very long time. We saw a mild case of that with the internet, but I think it's going to be even more so when you start having AI and robotics in that equation. And then your GDP is going to rise like nothing we've ever seen before, because again, you got robots and AI working around the clock. which puts us in a very weird particular situation and what our next move would be. But eventually we would find out what that would be, whether that's just entertaining each other and kind of just living our lives. But we'll see. I mean, that we're not getting into politics and all that kinds of stuff. We're here about the technicals. So with that being said, again, technical wise, we're broken, but we have to understand we got earnings around the corner. We are getting into a bullish period. You have to understand this week we have an event on Tuesday, which is supposed to be about tariffs, and people are concerned as they're going to be generic tariffs, but come to find out there's supposed to be more specific tariffs, which has kind of eased the market to some extent. So we may actually pop back above this level, which typically, if you are doing any kind of technical analysis, when you get a break of trend, you want it to retest this trend before you get any kind of major leg over. So we may have a strong run because April is typically a bullish month. We may get a strong run back up to this level to retest the 6K mark before we roll over. But again, if you want the market to continue to sell off, you need more fear. And if we have the fear of recession, the only way that's going to happen is either one, essentially inflation falls through the floor and there was hardly any inflation and unemployment is through the roof, or inflation is incredibly high and essentially unemployment is not. And that is not the case right now, right? We know unemployment for a fact after the revisions is very, very bad. It's this whole guesstimation about the manipulation that's been going on with the inflation and the concerns about tariffs and what that may look like. So again, I think we very much could, this level is going to be very critical for that. So if we can break above that over the next 2 weeks back over this, could see us retesting this. And the question is, what events are going to play out during that period if we're hovering around these levels here from that 5,600 to, again, that 6K mark. So we'll watch as we're a very critical level here. But again, technical wise, if you broke, you retested this major level, typically that means you're headed back down, and we may be headed down the 54 or down to the 52. It depends on how the series of events occur. This is why you can't get overzealous on one side or the other, because the events have to play out. If they're going to continue to write out the tariff worries and concerns, just much like the debt ceiling, it's going to pass like nothing and it's not going to do anything to the market. So you have to not be overly biased to one side or another. You have to watch good levels and buy. Again, the only thing that's been holding up the market over the past 2 years has been the Mag 7. The Mag 7 is heavily corrected in a lot of those stocks already by anywhere from 20% to 55%, right? So you have to understand that, and that's what's been holding up the market. So we've had rolling recessions, which has probably helped this current market, despite all the fraud and waste that's going on. Yes, there's a lot of that incorruptness that goes on, but how does that actually affect the market? It really doesn't affect the market that much. Yes, that it could go off. There could be a black swan event, and they'll foreshadow it on something else. But you ultimately understand you had a major correction in 22, and your major corrections don't typically happen for like every 4 to 5, 6 years. And so we're still in that window to where we could potentially run for the next 2 years before we still have a major correction in the market. We don't know what that's going to look like. The housing side of everything is starting to correct, so we do know that much. So maybe sooner, maybe later, but again, just kind of know where you're at. We've already corrected roughly from the top here. Let me see if I can get the top of this peak to where it went down, not to where we're currently standing, but we've corrected already just below 10, so almost 11. So we were in correction territory. We've kind of recovered since that, and now we're only sitting about 7. But if this is the case and we get more fear with the tariffs this week and we sell off, you sell down in here, you're looking at 12. Here, you're looking at about 14, 15%. 20% average correction for a recession is about 44. We'll see. I'm not totally bought anymore on the fact that we may correct down on 44%. A lot of people are saying like 80, 90%. Yes, I understand the database system is horribly bad. I totally agree with that. But on the same token, the way things have kind of played out, I don't know if that's going to happen, because we did have a major correction with the pandemic. And then that was back in 21. And then in 22, we had a major correction of another just a 27% correction. So what we have to understand, this new environment with all the money that's floating around, we may not sell as much. We may not correct 80% like we did. There was a lot of other things and controls that weren't in place back in again, that the 1920s, the great crash, right? You have to understand there wasn't nowhere near as much in liquidity back then. So I don't see a 80% correction like that happening. But on the same token, you've also seen things expedite, and we recovered from the pandemic with all the money printing. It's not saying that, again, that is not, we're not talking at all about the dollar and the global reserve currency. This is, I think, why we're heavily relying on crypto, but this is going to replace the underlying infrastructure for the market, and that will be a slow transition. So nonetheless, I think, again, a lot of people want or don't want the markets to crash because a lot of their money is in it, and they can easily leverage that and take advantage of that. The banks do. And so, again, you have to understand the system. They're not just going to let it go to waste. So you can debate it all day, but ultimately we're in this market to make money. So ultimately, again, so that's what we're kind of looking at here. Again, you've had two major corrections over a couple of years span. You're kind of in that in between mark. We could, again, still potentially run another two more years, 3 more years before we have any kind of major correction. If we're already in correction territory. So again, yeah, I can see us selling off a little bit more. But that may be the last dip, and we may recover. So you have to be very careful about how this plays out. A little bit of relief would be enough for the market to start really running again. And again, they're already talking about turning the printer on. So you have to be mindful of that. And you can't just ignore that and think the market's going to correct 80% and then never take a position. So that's that for SPX. Went on a bit of a ramble there. And then Bitcoin here. As we can see, we've been kind of that correction territory. I do believe this is going to hit down by that 72 mark. You got some really strong support here at this level, and I think that's really where we're going to hit. As you can see here, we have a lot of support roughly around that 70 mark. I think we're going to potentially come somewhere between the 72 and that mark. We've consolidated pretty wildly up here, so as long as essentially we don't drop below the 54, that would be a higher low. And then I think we get our last strong bull cycle here, especially with alt season. And then we'll roll over back and then we'll bear. And again, your low point is about that 15K. So expecting it to potentially get around that 35 on our next bear market, 25, somewhere around there. I think we could see our next, when we essentially roll into our next bear cycle, waiting for the next halving cycle. So that's what I see for Bitcoin right now. So right now we're kind of holding above this. If for some reason we can break out of this wedge, which we're getting very close to, and we break back up and can hold over, again, that 92K mark, that is definitely a bullish signal. If we can get a daily or weekly candle up above that, that's holding above that, definitely suggests that we're going to go much higher. I do believe we're going to hit 120, 130. Or 130K, maybe even 150K. It really just depends on what happens during that period. But again, you have to understand, even this correction here was about a 580% move up. And the problem is that people just aren't taking profits on these massive pushes up. And yes, maybe there's another leg, but again, at this point for Bitcoin and L1s, L1s haven't really ran that as hard this cycle around. I think that once Bitcoin may attempt to go for 120, 140, and then that's it, and it'll roll over, and then you'll have your L1 run, your essentially your alt season as well. So with the Bitcoin dominance changing over, so we'll see how that plays out. But ultimately, again, still a lot to look forward to there. And then with Tesla here, Tesla I think is super undervalued right now. They got so much going on, and as you can see here, it's been a very solid level here at that 228. I expected it ever since it went way up here. I expected it to come down to this point, to at least correct down to here. I think this is a very solid level. You do kind of have a pretty solid support here as well. So we need to make sure we can hold back above this 260 if we can. I think we're going to go back to an all-time high, and Tesla's setting up with humanoids and FSD. They just got approval for California for rolling out FSD, and that will rapidly start building that position. Again, you have to understand Wall Street is only pricing in right now for Tesla is the EV sector. And yes, all automobiles are hurting right now, but Tesla is still number one in all those categories and very different. You have to understand the storage, energy storage for AI. Tesla is a huge part of FSD, robo-taxis, huge business. You're talking about $1 trillion businesses alone. And then you have humanoids, which you're talking about generating about 5,000 by the end of this year. And then I think 50,000 by next year. And so you have to understand, for them, they want to get robots into your home as fast as they can, because that training data is going to be extremely important. And so I believe this will be the most expensive or the most richest company in the world at some point, with everything that got going on. And they are front running this thing, and they could, again, scale much better than a lot of companies can. So this level here this week at the 270, if we can break it back above that, I think Tesla's really kind of bottoming out here. Yes, it can still sell off, but again, you're going to need some new fears. Tariff fears aren't going to be enough, in my opinion, for this to happen. If inflation starts to run back up, which I'm expecting a lot of deflation with all the massive layoffs, because you still have the private sector that's massively laying off as well. And so that what those numbers reflect, that you could get one last scare, and then the market may recover back from that point. So again, the market already kind of knows what's been going on, and we've had rolling recessions. So to correct 80% is still hard, in my opinion, for something like that to happen. So again, that level will be very critical. And this level here, again, the 220 is extremely critical as well. You're kind of pinned in between here. The markets, or Tesla's been floating in between here. There's a lot of robotic news coming out. So Tesla's only going to take one robotic video, and it could be the Chat GPT movement, and this thing just rips up. And I highly believe in that. But again, it's all speculation. You have to take that into consideration. And I'm just a single voice that you need to, again, not financial advice, and watch and see. But I do really like that Tesla's extremely undervalued with everything going on. So just be very, very mindful of that. Then RX, they've got a big event here coming up on April 8th, I believe, as well. I think that will be another catalyst to potentially swing this back up. Again, I love this $6 mark. Every time it comes down here, I've been playing these ranges, and they've been doing great for me. So, and I've been trying to bring this company out. I think I think this company could do extremely well. There's a lot of short squeezing on this company as well. That could potentially cause this thing to really blow up over the short term as well. But it's really playing this game from about $6 to the $8 mark, and then it kind of goes up to that $10 mark roughly. But again, you can play the range or be buying here for long term. I've been doing both. I've been playing range and holding for long term as well. So we'll see what happens here. But I do really like RX moving forward as well. And then there's a couple ones here. Hood. It's getting this section here and kind of holding the support here at the 43 mark. If we can break above this, I think we can really start getting another bull run, potentially back to all-time highs. Again, you're getting some very heavily discounted. Again, this thing has already been discounted from the peak by 50%. So, I mean, I think this thing could rapidly push back up very quickly. I'm starting to really like Hood and what they're doing as well. And now with this massive 50% correction, yes, you can say it's a bubble, but ultimately, again, I think there's the forward PE, the way the markets are and the way they price stuff in is very different nowadays. And you have to adjust to that. The markets aren't always the same. They're always dynamic. And I try to help people understand that, because, again, you can't, everything in the world is dynamic, and it has to be. If you don't change, then you fail. And so, being said, again, the forward PE for a lot of these do seem very crazy, but again, it's just not the same. This isn't the market your parents grew up in, right? So they're very critical level here. I think if we can break that, then we can start looking very bullish on this. But you do have another pretty solid leg here. You need to break through at the 49 level mark. But I really like that as well. Duolingo is another one I've been really watching. This is obviously had a massive correction during the last earnings cycle, but this could be a very good play here as well. That's about a 40% correction. That's what I'm saying. You're getting these massive corrections already. Like, how much more do you want it to correct? 40% is massive. For stock to lose 40% of its value is wild. Like I said, it can roll over. We could have a little mini resistance here that we could test and retest and come back down here to the 234. Could be a strong possibility. So you're currently holding this 282 levels. So we'll see what happens with that. But I like Duolingo as well moving forward. HIMS has massively corrected. I have a position in this, building positions in this. Massive correction. That's what I'm saying. When you have massive corrections like this, almost 60% correction Like, why would you not take a position in that, right? Right? It's not saying that it could go back, but these are really great companies that are producing some really great things and really innovating how we see a lot of different things. And so you have to take that into account. And so I do believe this market, once a lot of things are corrected, again, when you have that transitionary period, especially with a administration that does a lot of action, you're going to scare a lot of people in the market, and you will have some major corrections. And at that point, it'll be very, very self-sustaining and a very strong economic market. And then again, I think you could easily recover this. And so HIMS is another one I'm really watching here. It's holding this level really strong at the 84 level. It's got a little bit of a speed bump here, but it's pretty solid support here at 24 as well. I think if this turns over, 24 is kind of the bottom here. Getting very, very close to the bottom. Again, you've corrected 40% from the top. Again, a lot of people are worried and concerned, but there's massive corrections already happened. Alpha is another big one here. This massive correction. I can understand this one with the tariffs because they import a lot of their stuff, but that's a 70% correction. Like how much more of a correction do you need, right? Like even doing the .com boom, things corrected 80%, 40%, 50%. You're already seeing that correction already. A lot of these stocks have already massively corrected. The problem is a lot of the other stocks that aren't big tech haven't essentially recovered since 22. So you're all the stocks that had all the room to run on it, they're the ones that are correcting. And so where are you going to get the extra percent, the extra 20, 30% from the index to sell off? That's the thing, is you don't really have that right now. So again, with these massive corrections already, we'll really see what happens here. But again, Elf is another good position I really like. It's holding this level at the 55 really well. I think it can easily break this if you're looking over a larger investment window over a couple of years. Right now, they're expanding, and they do have a very, very good growth rate. And so, being said, once the market recovers, which I think we're right on the cusp of that happening with the next year, and that's pricing in a recession and all that. I think you'll have an event maybe in 2 years that may like really correct the market. But again, you're already seeing a major correction in individual stocks. Like, what more do you need on an index? Could maybe sell off some more, but again, a lot of these stocks have been corrected so much, and so now you're starting to see a bottoming process on a lot of these individual stocks. So Elf majorly correcting. Meta is one of the ones that really hasn't corrected as much, but it's still corrected even from the peak. Meta. Right, this is one of the biggest ones that have ran. That's still a 22% correction. Like, how much more of a correction are you really anticipating, right? If you are not buying the corrections, again, not financial advice, if you're not buying these 20 to 50 to 70 to 60% corrections, like, what are you really waiting for, right? But Meta, I think, is a very strong company. But again, I think in my opinion, I think there's some better moves than Meta. I think Meta can continue to run up, but again, you're kind of more towards the top of Meta. I prefer a major correction on Meta, but again, you are not in the current market, I think, for Meta to sell off 80%. Yes, I do believe there's a debt bomb, but again, they can, with the massive action that's being taken, I think a lot of that's helping delay a lot of what could have been really, really bad if it was a different story. And again, not trying to get into politics, but I think that could be massively corrected. But again, what you're seeing is a massive correction, and a lot of this is driven by tariff wars, and that I think is quite wild. And you even have like something like Amazon. So from the peak, Amazon's even corrected. So we're going over a lot of the Mag 7 here. Amazon's already corrected 21%. It can continue another leg down. You have the 200 support here, I think, at the 160. Anytime the stock gets around that 200 support is when you want to start really buying heavy, because at some point it could even dip below that. But at some point, anywhere around that 200 moving average on the daily, and the stock is going to start turning at that point, right? So that never ceases. You have to understand things always are designed to go up. So these massive corrections, if you're not taking advantage of them, it could be the downfall. If you're waiting for more of a correction than what you're already seeing, that is really what's interesting. So we'll see moving forward. That's what we got on Amazon. Amazon needs to hold this 195, but again, I still think we can drop down to the 172. and then start recovering it and going back to all-time highs here shortly. Shop is another really big one I do like. Again, I don't think you're going to see these $28 levels. That was your major correction. Look at Shop in itself. Shop is a good indicator on how quickly the market. Look at Shop cratered 84% in 22. That's what I'm saying. 22 was our year where everything cratered, and you have ones like Shop that corrected 84%. And then now we're just barely correcting, right? Like this is still a major correction in the stock. It's massive correction, right? Because if I could pick the right tool here, we have massive corrections. You even have, again, a 31% correction. Like, how much more do you need for this thing to really sell off, right? And so this is why I like the time frames that I go off of, because, again, to see these massive corrections, you need anywhere between a 4 to 6 year period of just straight growth and running up, and then it corrects at that point. To get anything wildly like this, again, this was just 2-3 years ago. So maybe another year we could see another massive correction, but I still think we have one really strong leg up, and it might be a very golden, the way things are being set up. It could be a very much stronger cycle. I mean, you've already kind of gone in a very strong cycle, even from the bottom here, from 84% correction. So very, very interesting times, however you want to look at it. But SoFi is another one I think could be a good buy here from the peak here. How much have we already corrected? To the trough is almost 40%. Again, when do you see 30, 40, 50, 60, 70% corrections, right? Like, you're already starting to see that. So I think I really like SoFi as well. But if there's any more news about banks or anything like that, which we had a lot of banking runs around the 2022 year, and that essentially what corrected a lot of things massively. We also had massive inflation around that time as well now. So again, you have to worry about what's going to happen with the recession concerns. That may cause another leg down. I think we could potentially get one more leg down, but you definitely want to be buying that leg, in my opinion. But again, not financial advice, because I think that will be the last leg, and I do believe it will get in a very golden bull market where it's going to be a massive, massive bull run. So you want to be buying, and even though it's a scary time to be buying, if you can afford to and hold, it's definitely that time to be doing that. So, and then again, you have BA, which is, I don't know how the stock does what it does, but again, the solid support, again, sitting here at that 146 level, kind of pinging between there and topping out here at the 180 level. So we'll continue to watch that and see how that does play out. But again, everything is looking like it's bottoming. Again, you've had a major correction here, even on Boeing. Again, I want to emphasize how much it's already been taken off. It's already a 50% decrease on the stock. I don't like the company at all, but again, it's a 50% correction. If you're looking at pure numbers, technical wise, it's a 50% correction. How much more do you really need, right? And it typically bottoms out roughly here at the 125 anyway. So I think it was during the pandemic is the only time we got down here by the $100 mark. So to get it that low, I don't think it's going to take a lot more. We've had tons of bad news about planes falling out of ears, and you only drop to 141. So that should tell you a lot right there. So you have to go off how the market's actually working, as opposed to, there's a lot of corruptness and stuff that happens in the background, but still, I mean, I don't know what to tell you. And even banks could heavily correct here as well. JP Morgan, again, the number one bank in the US, you're looking at a correction already of 19% almost here. So I think this could really, if you want meat on the bone, this could potentially sell all the way back down to here, I think at the 176 mark, and that's about a 40% correction. Like, how much more correction do you need, right? And I've talked about one last leg. I think banks still have a lot of meat on the bone if you're looking for some place to shave points off of to bring down an index, right? Like, you don't have much more to really take off, right? Like, a lot of these, you maybe take some more off of Amazon or some of these other ones, but even Apple, we haven't looked at Apple, but JP Morgan, we'll just talk about this real quick. JP Morgan's kind of holding that 224, but I think they can correct over. And then you got a very solid support here at the 197. So do keep that in mind. But again, ultimately, I think we can correct potentially down to 178. Again, it depends on momentum. Like I said, you've already had a major correction. I don't know how much more you need. You're going to need some big news, some recessionary news if the jobs report does come out. That may be enough more, but just to keep that in mind. Apple here from the top. We're talking about the Mag 7 here. I think we've hit every Mag 7, 20%. The stock shouldn't be as high as it is anyway, but considering it holds 6% of the index, they need to do historical buybacks. What they essentially did historical buybacks back here that have caused it to ramp up and hit all-time highs again. So these levels are critical at the 207, mostly so here at the 192. I think it can still get down this low, potentially even down here to the 167, maybe the last leg that when we talk about if we do get some more fear, I think that's where we could end up. But I'm leaning towards the fact that we may just get one strong, quick leg down, and then when it bounces and it goes from there. Because again, I don't know where you're going to continue to shave points off because the majority of the market has already been beaten down and been that way for a while. The Mag 7, if you haven't noticed, the weight essentially in the SPX has shifted to the Mag 7. So again, yeah, it will continue to sell off, but again, on the same token, you've already had major corrections in the Mag 7, right? Anything more than 10% is you're in correction territory, and you're seeing 25, 30, 40, 50, 60% corrections already. Like, how much more of a correction do you need, really? So you need to keep that in perspective moving forward in the series of events that are about ready to unfold. Yes, I think we will have deflationary reports, and yes, I do believe your unemployment report's going to be it's going to be wild out of expectations, which scares the market. And then you price in a recession at that point. And then when you price in the recession, again, I only think you have one more strong leg down because you don't really have a lot more to be shaving off, right, from these stocks. And you got some really good discounts with some really good stocks right now. So, but with that being said, again, have a great day, and I will see you guys on the field.